What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the overall market. We're also going to be covering the SoFi stock, and I will also be going over, additional retail stocks, that retail investors have been in the past year, and we will decide what companies are actually great buys and what stocks should actually be at the levels that they are at right now. I understand everybody, that's in a growth stock right now feels like their stock is being manipulated, but some stocks do actually deserve to go to the ground and some deserve to go up. And it's all about those earnings. And we will be taking a look at the truth behind several of these companies' earnings to decide what companies are great buys right now. And I want you guys to know I am feeling a lot of pain inside of this market. It almost feels like gambling. I mean, I've been to the casino dozens of times over the years, and it almost feels exactly like gambling. You basically have no chance at all when there's, 6 months of nonstop dip buying opportunities. Some of these stocks are actually going on 1+ years of dip buying opportunities. So, guys, it is an extremely rough market, and we want to try and preserve that capital as best as we can in such a high market with insane volatility. If you enjoyed this video, be sure to subscribe to the channel. Let's try and get the channel past 10,000 subscribers. Be sure to smash the like button. Be sure to drop a comment. Are you buying the dip right now on SoFi stock or other stocks? Let's get into the video. All right, I have to be completely transparent with you guys. I've been talking about SoFi stock for the past, 6 months being a great investment and having three major catalysts to get this bad boy moving. Those three catalysts were the bank charter license, the student loans coming back in full force, and of course the Super Bowl for marketing, user downloads, and people understanding what SoFi stock is. Those three catalysts are having three major problems of being completed because of things that are out of control from SoFi, okay? This is talking about, leadership in Congress, presidents, governors, all of that stuff, okay? It's very, very political what is going on in the world right now, especially with, Omicron, COVID, inflation, and there's a lot of manipulation inside of the market right now, okay? The NFL drawing up Super Bowl contingency plans in case COVID forces move from Los Angeles area. There's been a mandate extension for the mask in California. They just extended it out 2 days past the Super Bowl. Thousands and thousands of people have made their trip, to LA, and I don't know why they would want to lose out on an opportunity like this. I don't know if it's the governor, but yeah, this is, not good. But, this came out yesterday, and there's a new article that just came out today. Super Bowl set to go off as planned at SoFi Stadium in Inglewood. And if we scroll down, unforeseen circumstances could be tied to COVID cases in LA. Scroll down a little bit lower. The SoFi Stadium changed its COVID protocol in response in the winter surge of Omicron cases mid-December. A spokesperson from Governor Gavin Newsom's office said that the state is looking forward to hosting the Super Bowl at the new SoFi Stadium. Okay, so if the governor is given the stamp on the SoFi Stadium, that is great news. Okay, Gavin Newsom saying, we're happy to host it, we're looking forward to it. That's good news. So that's one of our three catalysts. Okay, so this is a big one, of course. We hope that, the Super Bowl is being played at the SoFi Stadium, of course. Now, our second catalyst, of course, the Biden administration extends payment pause for student loan borrowers until May 1st. Okay, we were supposed to be getting our student loans back in 3 weeks or something like that, and it got extended to May. Okay, some people were telling me this has to do with Biden's midterm election or something like that. Him trying to get votes for the younger generation that are in college and stuff like that. Trying to get his name out there, that he's extending the student loans for the kids, that sort of thing. So that's political, guys. That is hurting SoFi. It's out of SoFi's control. Of course, Biden doesn't care about SoFi or, any of these new technology stocks. It's just a lot of things are happening political, for him to get, these votes and stuff for midterms. That's what dozens of people were telling me on my YouTube. I wasn't even thinking about it. So that looks like why they're extending out our second catalyst. So that's two. And then, of course, guys, the third one is our bank charter license. The FDIC chair intends to resign in February, giving Biden more say over on bank regulation. This could be another reason why we don't have our bank charter license. If we just go back a little bit ago, he had another person in there trying to run and take over the OCC. Omarova, she pulled out because the Democrats actually voted against her. So political. COVID, Omicron, mask mandates, Biden trying to get his votes, control over banking system. As you can see, SoFi is at the grips of political control right now. Everything that SoFi needs is not happening. Our three catalysts that I've been talking to you about are not here. Once SoFi obtains these three catalysts, I believe this stock is going to surge, okay? I believe we make our way into the 20s, and I think we break all-time highs. That is how I feel about the SoFi stock, guys. There is nothing wrong with the company itself. There is things that are political controlling this company. Be sure to drop a comment, okay? You guys helped me on, the Biden voting, correlating to the student loans getting extended out, okay? You guys are helping me, to be honest, okay? I'm not all the way in on this political stuff. I want these three catalysts. I think this stock breaks all-time highs. I think all these big money makers will move on to newer stocks inside of the market and short those. And SoFi will be a great long-term investment, for these big money hedge funds. Now, like I said in the beginning of the video, I'm going to go over a couple of retail favorites that hit this market early in 2020 and be completely 100% transparent if these are great companies, are these good buying opportunities right now. We have to be transparent. Every single one of these stock twits chat forums on these stocks are going to say manipulation, manipulation, buy the dip, buy the dip. That's what retail investors are going to continue to say, okay? Wish stock was an IPO, actually. It was about $31. It's lost almost 90% of its value. Is this legitimate, okay? Should this have happened? If we go over to Wish stock and take a look at the earnings, they had revenue growth in December, revenue growth in March, decline in revenue growth of 6% in June, September, decline revenue growth of 39% in September, okay? That's just the summary on Wish stock. We're going to finalize this after we go over all these stocks. Root stock, the exact same thing. Another IPO, highs of 23, lost 82% of its value. The Root stock earnings report, lost 52% growth decline in December 2020, 44% decline in revenue growth, 26% decline in revenue growth, and then a solid bounce back. Beachbody stock, another IPO, highs of 15, lost almost 80% of its value, $2 stock. Beachbody had 35% revenue growth, 33% revenue growth, 2% revenue growth, and then 17% revenue decline. Romeo Power was another SPAC stock, hit highs of $23, lost nearly 82% in value. Romeo Power had 44% revenue growth, 58% revenue decline, 17% revenue decline, and then a 700% revenue bounce back. Paysafe was another SPAC stock, hit highs of around $19, lost 73% in its value. Taking a look at the Paysafe earnings, they had 1% revenue growth, 4% revenue growth, 12% revenue growth, followed by 0.5% of revenue decline. SoFi stock is actually up 13% year over year, 30% from the SPAC, transaction price, of around $10. The SoFi earnings have 166% revenue growth, 120% revenue growth, 100% revenue growth, followed by 34% revenue growth. Now we're going to summarize all of these on which of these retail investments are great buys at these levels or, should not be great investments at these times. As we can see, the Wish stock had two earnings of revenue declines. That's 6 months in total of -6% and -39%. This is a $2 stock now. It is still a F rating stock in my opinion. Root stock, 3 earnings of revenue declines for 9 months. -52%, -44%, -26%. This is an F stock. This is not a good buy. This is why it is a $2 stock. Beachbody, 2 earnings of revenue declines, but actually I just put 2 earnings because they were bad of revenue declines. So 6 months, they actually had 2% revenue growth on the previous earning and then a -17% revenue decline. This is actually an F plus. You cannot just give them an F, okay? They are actually not doing as bad as Root or Wish, but this is still a $2 stock. This is definitely not a buy right now. Romeo Power, 2 earnings, revenue declines, -58%, -17%. This is an F stock right now at $3. Paysafe, 1 earnings of revenue declines of 3 months. It was actually a 0.5%, not even 1%. This stock is a D plus buy in my opinion. It's a $4 stock. As you can see, it is higher in value than all these other companies, and I believe Paysafe right now is a D stock. They had 3 earnings reports of increased revenue growth prior to this last decline of a 0.5%. So it is not an F-rated stock, okay? If they bounce back in the next 1 to 2 earnings, this could move its way into the $10 range. SoFi stock, 4 earnings in a row of revenue growth. Guidance has accelerated revenue growth into Q4. This is an A plus stock right now at $13. This stock should not be $13 by any means, guys. Once again, this stock is being correlated to political aspects. All three of our major catalysts are at the grips of politics. And you guys just saw the data, the headlines at the beginning of the video. Our Super Bowl, our bank charter, and of course, our student loans are not in our control. They are in government's control, Congress's control. You guys see the truth. The SoFi stock is an A plus buy in my personal opinion. And I believe this stock could break all-time highs once we get those three major catalysts checked off the box. Then we could start moving. The big hedge funds will move on to other stocks such as these names to short in the near future. Once again, I want to apologize for anybody that has lost money in this market. If you were not in those, top 8 mega caps, the past 18 months, you likely lost a good amount of money, okay? So I have been feeling the pain in this market. I do feel like this market is correlated to investing at a casino and gambling, okay? We are not investing when we're buying 6 to 9 month falling knives, okay? That is not investing. That is manipulation. But as you guys can see at the back end of the video, I am showing you what stocks should actually be at the levels that they are at, correlating to their earnings reports, okay? So of course, we're going to get more and more data from a company like SoFi in the next, 2 to 3 earnings reports, where this could be a actual game-changing company disrupting the banking industry. And, Anthony Noto wants this company to be a $1 trillion stock. $1 trillion stock from here is a 100x. That could take about 10 to 15 years, of course, but I do still see us breaking all-time highs when we get those major catalysts. I think this could be a $45 stock or higher by the end of the year. Once again, as you guys can see, political. We are not in control right now. Student loans, Super Bowl, bank charter, that is out of SoFi's control. They just have to do their best and do their part. This is out of SoFi's control. Once again, if you enjoyed this video, be sure to smash the like button, drop a comment. Are you buying SoFi stock, or what are some other companies that you are loading up on right now? Once again, my name is Kyle. Hope you have a great day.